Welcome back to the floor of the CME Group here in Chicago. February 15th, I'm Killer from Treasury Curve. Treasury Curve is an institutional money market portal. We assist firms in their overnight cash management. Let's get into the zone, baby, the cash money zone now. Middle East, revolutions everywhere. We're really seeing after the initial success in Egypt, it is spreading. You know, we're having clashes in Bahrain, Yemen, Jordan, back to Tunisia, Algeria, and Iran. And we're seeing some bloody clashes here with the government and the anti-government. So it's really kind of up in the air here and how this is all going to work out in the Middle East. Some scary situations. We'll see how that continues to develop day after day here. You know, I think the biggest thing I want to talk about today is inflation. Tell me what you think about this inflation concern. You know, get me at The Killer or comment here in this video. But inflation, it really is a grave concern. And I think the Bank of England is really getting pressured here to raise rates. And what is that going to do? You know, we have a difference of policy here. You know, we are inflating the economy, and Bank of England is talking about raising rates. We have to, as Peter Yasho spoke to it yesterday, we have to keep these rates low in this environment until we get out of this situation. But, you know, I think it's similar to, you know, Uncle Ben's inflation barometer here. You know, the barometer over there in England, they're stripping out food and energy, and that's quite perplexing, folks. You know, you take out food and energy, which I guess we don't use every day, but nonetheless, they're taking that out and they're saying inflation really isn't that bad. So let me know your thoughts about this inflation. China's clearly seeing inflation. You know, that month over month, that January inflation number rose yesterday to 4.9%. It was almost double the expected results. So we will see how that falls out. Let's drill down now on these treasuries. You know, I think these treasuries are continuing to look at this market, waiting for PPI, waiting for CPI. A lot more inflation data coming out this week. You know, we're currently seeing that 30-year hovering right at that 119 even level. You know, a target above a 119.19. You know, and that 50-day, which I like to look at that 50-day in the 30-year, it's coming in today at 120.17 in the event they come and grab those treasuries. The 10-year, that 50 days coming in at 120.03. The S&P, you know, we had a high yesterday of 1331.25. It's pretty sensational. This market continues to go higher and higher, folks. And I don't know when the switch, we talked about, you know, Uncle Ben's on board. We don't know when that switch is going to be, you know, pointing to the downside, but maybe it's coming soon. The weekly pivot's coming in at 1320.75, and I think under 1318, we're going to see those HFTs, those high frequency trading systems, step in. Some volatility will be produced under 1318. You know, the upside, that 1336 is intact. You know, the NASDAQ, the weekly pivot is coming at 2364.50, and the Jones, which my 5-year-old calls it the Jones, not the Dow Jones, the Jones is coming in at 12,177. And all these products I'm speaking to are the mini products here traded at the CME Group. You know, the euro currency, they're looking to the Bank of England, you know, that rate decision. Are they going to have to raise rates again? We will see. But I think underneath that 100-day moving average at 135.33, that 50-day is coming up on the radar. It's blinking a little bit at 133.65. You know, the currency is keeping an eye on this inflation, which is in China right now. It's all over the big board about Chinese inflation. You know, and that kind of brings me here, you know, to Confucius. You know, let's take one moment on Confucius here and see what he has to say. Confucius says a flower that grows much dirt before it blooms. But he also says 2 wrongs not make right, 3 lefts do. From the floor of the CME Group, I'm the Killer, be the hammer, not the nail.